Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Turning to the Australian dollar on Thursday's price action, we can see the market has respected the 60-day moving average, which has rebounded from the 67 cents and now put a slightly firmer stance into Friday's session, looks towards a resistance of 67.55 and maybe even on towards 68.15 before any reassessment. Any pullbacks should still recognise the support level around 67 figure as a potential base in the short term. Meanwhile, in overnight, on Thursday's attention turned to the US CPI, or the consumer inflation data, which revealed that the consumer price index rose by 0.2% in September month over month and 2.4% year over year, slightly surpassing expectations, while the core CPI, excluding volatile food and energy prices, increased by 3.3% year over year, slightly above the 3.2% forecast. The dollar index, meanwhile, nudged slightly higher, that is, towards 103 figure, which sent the euro lower and now challenging the region seen at 108.80. It is expected to see a bounce from there, and given from this candle, which is close to a hammer, may actually see a recovery back towards the top side of 110.10.15 and reassess. The dollar yen pauses its rally and retreats from the 149 area and now puts a slightly weaker play into the market given the divergence here, and therefore looks towards the region of 148.30 or maybe to about 147.5 before profit taking emerges. Any upside attempts? Well, I would say that the given rejection from the 149 again being the second attempt may see a further risk to a rejection. Sterling was also weaker overnight and may find support now around 129.60. Although there was a rejection from the lower side of the range, there is bullish divergence evident and therefore could see a recovery back towards 131.15 to about 131.5 and reassess. Bouncing gold may have surprised some of the bearish traders. Nevertheless, the tri-star doji still is in play and therefore could see these gains reversed and look back towards the bottom side of the range around 2,600. A break there would give further scope to the downside and find this trend line around 2,560. That being said, though, if we get a clearance and a close above 2,636 to 37, may initiate a further squeeze and look back towards 2,660. Wrapping up with oil, the rebound is now looking towards a further squeeze and maybe on towards $77 a barrel where the recent rejection was. Overall, though, we could be locked in this range now, 71 to 77, as the market moves forward. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.